The US dollar continues to extend its decline for the third consecutive session, led by a strength in the Japanese yen and the Aussie dollar, reinforced by the US retail sales month-on-month figure that came in below expectation for December. Mixed performance in the major US stock indices, where we continue to see underperformance of the US technology stocks. At the end of the US session, the Dow Jones Industrial Average managed to inch out a marginal gain of 0.10%. Oil prices, which is the West Texas crude oil, continues to trade firmly above a key short-term pivotal support level and also holding firmly above its key 200-day moving average at around the $62 per barrel due to renewed threats up from US President Trump that has threatened to send a second attack carrier group to the Middle East during this ongoing negotiation talks between US and Iran. Very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Wednesday, the 11th of February 2026. So let's have a quick look at the disclaimer first. All right, just to make sure that everything's good. Okay. So leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So today there will be a full slew of daily dose, which I will cover all the intraday technical outlook on those broad-based cross asset classes that we cover on a frequent basis due to a looming key risk event today, which is the release of the daily US non-farm payroll data and unemployment rate. So we touch on this aspect much more later. So let's have a quick recap what has taken shape yesterday. So let me take you through the movement of the FX market first, which is pretty much significant. So if you look at the 5-day rolling performance of the US dollar against other major currency, which take into account of the very short-term trend, which is a 5-day rolling trend of the US dollar, across the board dollar weakness is being led by this dollar yen, which is down by -2%, followed by the Aussie dollar. That means followed by the US versus the Aussie dollar. That means the US dollar shed close to -1.7% against the Aussie. So basically, if you see all these lines are turning downwards, it means that the dollar weakness is gaining strength over here, because all this currency is use dollar as a base currency. That means $1 equivalent to how many Australian dollar. And if you were to look at from a perspective over here, is that the dollar versus the sterling pound is losing steam as well, but not as much as other major currency, where the dollar only shed a marginally -0.07% based on a 5-day rolling performance basis. So the reason why the dollar is not losing so much strength against the sterling is due to some political reasons in UK, where the current prime minister may be on a risk of losing his job due to his appointment of various key cabinet ministers with that alleged, we call it Epstein over here. Then the next thing we want to touch on very quickly will be the movement of the US stock market over here. So the movement of the US stock market, what we could see is the Nasdaq 100 was the worst performer yesterday, down by -0.56% due to renewed weakness again coming out from the US technology space. And the Dow Jones Industrial Average managed to outperform by a marginal gain of 0.10% due to its strong positive performance in some of its component stocks centered around the industrial and healthcare sectors. So if you look at the S&P 500 heat map yesterday, we see a deep sea of red again for those mega cap technology stocks like Google and Meta, which is down by almost 1% and 2%. So also Google down by -1.78%, Meta 0.96%, and we have Nvidia down by -0.8%. And we see a bit of green around the industrial and as well some of the healthcare stocks as well, where potentially these stocks itself, some of them have a heavier weightage in the Dow Jones Industrial Average. So if you look at the groupings of the 11 sector S&P 500 sector in the heat map, we see the top 3 performer being centered on much more defensive play. Utilities up 1.29% yesterday. Real estate, which is the REITs, up by 1.24%, and basic materials continues to outperform as well, 0.62%, 0.69%, pardon me, basking on the limelight of this continuation of this potential expansionary foreign policy that's being undertaken by the US White House administration. And lastly, we have this particular geopolitical risk premium that is still going on in the Middle East with regards to the Iran-US ongoing fiasco, I would say. So Trump yesterday, as usual, hints that he may send a second carrier group, which is a strike group, with warships for sure into the Middle East region as Iran and US continues to have these negotiation talks. So that allow oil prices to trade firmly above our key pivotal support level. So later I'll share with you guys what is a potential upside trigger level for oil price that could potentially see further movement towards the upside on the intraday basis. Okay, then this morning we have a tier one Chinese economic data that's just came out about an hour and a half ago, which is 9:30 a.m. Singapore time. So I would say it's a rather mixed reading over here. So we continue to see inflation trend, which is core consumer prices trend year-on-year basis continues to remain on the weaker trend. So market participants expect it to be at 0.4%. But it came in much lower at 0.2%, below last December print of 0.8% year-on-year. And on the consolidation side, the PPI, which is the factory gate prices, so that factory gate prices, that means i.e. Producer prices, that means from those factories, manufacturers, how much they charge their goods to the potential end user. So factory gate prices, PPI in short, for January, it continued to decline, but it declined at a slower pace than what market is expecting. So it came in at negative 1.4%. Market is expecting slightly higher, negative 1.5%, and also it came down by 0.5 percentage point below. It came above, so better than the previous deceleration of negative 1.9% year-on-year in December. So overall, it's a much more mixed reading on the inflation picture in China. So that actually allows the Hong Kong indices, which is related pretty much to the health of the Chinese economy, to trade in a positive tone today. So the Hang Seng Index is up by 0.3%, trading near the session high as we're speaking at 11 a.m. Singapore time. The higher beta Hang Seng Tech Index, which comprises the China big tech stocks, outperforming at 0.85%. And we see the A shares, which is being defined by the broader base CSI 300 benchmark index, almost unchanged, a negative 0.05%. The smaller, narrower A50 benchmark index that comprises only of 50 big stocks, 50 big market capitalization stocks, A shares that is listed on the Shanghai Exchange, underperforming, down by negative 0.27%. So I would say that so far there is no kind of a broad-based risk on that is being seen on the Hong Kong and China stock market after the release of the mixed inflation data reading that I shared with you guys earlier. So the rest of the other Asia market continues to bask in the bullish limelight, especially the Nikkei 225 continues to surge to fresh all-time high over here. So in fact, the Nikkei 225 today there's a holiday, but the futures market is still open, which is trading on Globex right now, up by 0.58%. All right, going to extend its gain to potentially hit another fresh all-time high over here. So what's interesting over here in the Japanese stock market is that the Japanese stock market continues to appreciate in line with the yen appreciation. So what we could see right now is that previously we have fears that if we start to see a stronger yen, the Nikkei 225 may face renewed downside pressure, but that correlation has started to break down. So in fact, perhaps right now we will see that given the fact that market participants now have a view that despite we have an expansionary fiscal policy coming out from the Japanese administration, but given that the Japanese administration has put a let to prevent kind of a speculators from actually ramping up yen weakness bets, by giving this kind of very strong verbal intervention in the FX market, and also with the promise of having a much more responsible fiscal policy. That means, i.e., potentially this expansionary fiscal policy undertaken by the Japanese administration could be funded by the current high amount of foreign reserve, instead of getting the Bank of Japan issuing longer term bonds into the market over here. So that actually explains the reason why we are seeing a movement where the yen appreciate in line with the Nikkei 225 as well since the start of Monday. All right, over here. So onwards next now will be pretty much covered what has taken shape yesterday. So let us now jump to the intraday technical outlook on the FX market first. So let me expand my screen over here, and let me go through the FX market, and let me also expand it further. Okay, good. I think everything is great right now on the screen. Okay, so let me touch on the broad-based trend of the FX market by looking at the US dollar index. So the US dollar index over here continues to shape that bearish reaction after it hit a inflection level on last Friday, 6th of February. Can't break above the key intermediate resistance level at 97.70 and 98.05, which confluence with the downward sloping 20-day moving average. So since then, it has now undertaken 3 bearish candlestick price action movement, and taking into account of today's intraday drop as well, which is down by negative 0.2% as we are speaking right now, Asia, Singapore time, 11:15 a.m. So that has more or less solidified our view that potentially the low of 27th of January all the way up to the high of 5th of February is considered as a dead cat bounce, and this dead cat bounce has ended, and potentially the US dollar index now is en route into the start of a potential bearish impulsive down movement that could potentially also break down below the 27th of January low as well, given that the broader picture of the dollar index still continues to remain trading in the downtrend since the high of 13th of January last year. Okay, so that's the dollar index technical observation. Now, let us start with the euro dollar. So as we're speaking, the euro dollar now continues to shape a bounce after yesterday's minor consolidation right above our first support that we highlighted yesterday, which is those updated levels 118.72. So given that it still can't break above this Monday high, which is at 119.27, we will still maintain the short-term pivotal support at this 118.40. But what we could see over here is that this is considered as a bullish flag formation, a minor bullish flag formation, indicating that potentially we may see another minor impulsive up movement, very similar to the movement that has taken shape from 6th of February to 9th of February the previous week. So if we start to see a bullish breakout in the European session above 119.27, then I will tighten the pivotal support to 118.72. So for now, still maintains 118.40, maintain that bullish bias. Next 2 intermediate resistance level to watch will be 119.93 followed by 120.40 next. Only a bearish breakdown below 180.40 will negate the bullish tone to see a choppy corrective downward drift to retest 117.76 next, which is the double bottom minor swing low of 3rd of February and 6th of February. Next up will be the pound against the dollar. So the sterling dollar managed to help right exactly at our predefined first support level, which we highlighted yesterday, 136.27. So given that it indeed shaped a bounce off from here, so indicating that potentially we may continue to see this higher low and higher high. And in fact, with this bounce taking shape right now in the Asia session as we are speaking at 11:18 a.m. Singapore time, it potentially now has evolved into a minor ascending channel by connecting the series of this higher low over here. Right. So first resistance level will be this minor stiff resistance that got rejected previously on 4th of February, and previously was also the minor swing low of late January where it broken down and kickstart this minor decline scenario in the last first 2 weeks of February. So first resistance zone they got to surpass to actually increase the odds of this bullish impulsive upmove sequence extending further towards the upside will be 137.30, 137.50. So no change in terms of the pivotal support 135.88 unless we have a clear hourly bullish breakout above 137.50. Then I could tighten my pivotal support to today's Asia session minor swing low, which is at 136.27. Above 137.50 potentially sees a retest on the 28th of January and 29th of January minor key swing high area at 138.48 in the first step. Only a bearish breakdown below 135.88 will invalidate today's bullish bias view to see a drift downwards to retest the key 6th of February, which is last Friday, minor bullish reversal low at 135.08, and we're also coming very close to the rising 50-day moving average as well. All right, next will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar, as we visual, continues to remain firm, and today it finally staged a bullish breakout above 70.90 right now over here. So given that this has already broken out above 70.90, so I will continue to remain bullish in any minor pullback. First pullback level to watch will be for sure 70.90. Then I would tighten my pivotal support level towards this minor bullish flag formation low that was formed previously during the US session yesterday at 70.65. All right, over here. So let me push it up. 70.65. Okay, let me tidy up the levels. So maintain a bullish bias with a tightened short-term pivotal support now at 70.65. Two intraday key resistance level to watch will be 71.40 followed by 71.75 in the first step for the Aussie dollar for today. However, if we start to see a bearish breakdown below 70.65 and the hourly close below it, so that will invalidate the direct push up and see another round of minor corrective decline to retest 69.98, which is very close to the psychological level of 70 cents, and 69.78, which confluence with the pullback support level of this former minor descending trend line that kept previous rally since 6th of February and 4th of February. And if we do a Fibo retracement of this entire impulsive upmove sequence that is playing out right now from the bullish reversal low of last Friday all the way up to today's intraday Asia session high, that also confluence with the golden ratio of 61.8%. That means, i.e., if price action indeed dip down below 70.65, I'll be still on the lookout for bullish reversal candlestick at 69.98, 69.78 to turn my bias back to the bullish side of the story again for the Aussie dollar, given that the longer term trend for the Aussie dollar remains constructively bullish. All right, over here. So that's for the Aussie dollar. Lastly will be the dollar yen. So the dollar yen continues to plunge down as expected right now, hitting our support level. So right now it's already breaking below 153.85 over here. So give me a minute. Let me put it in dotted line because it's now breaking below this level. All right, 153.85. Okay, so with that, any potential bounces, I will still maintain a bearish view over here with a zone over here at 153.85, 154.21. So I'll remain a bearish bias at any bounces, but based on the better risk management perspective, I will tighten my pivotal resistance downwards towards 154.73. Where previously it was a minor congestion support area of that was in place since 2nd of February, got broken down yesterday during the US session. Then at Asia session, it did a lower high right below 154.73. So that will be a very important sentiment level for the bears to maintain its bearish trajectory. So with that, this will be my Titan pivotal support. That means, i.e., whatever bounce allowable, I can only allow it up to 154.73. If it start to goes beyond it, then it will invalidate my direct bearish bias view on the dollar yen. So with that, Titan short-term bearish, Titan short-term pivotal resistance 154.73. Maintain a bearish bias view on the dollar yen. Next support level to watch, 152.76. Breaking down below it will potentially take us down towards the key 23rd/29 October 2025 lows, where previously this low managed to kickstart that rebound that has taken shape late last year. All right, so that will be at 151.90/60. However, if price action starts to squeeze up and the hourly close above 154.73, then potentially we may not start to see another round of choppy corrective rebound sequence unfolding to retrace it back towards the 20 and the 50-day moving average area again, which is at 155.66 and 156.36. All right, so that's for the dollar yen, still maintaining a bearish bias with a tightened short-term pivotal resistance for today at 154.73. All right, so that sum up all the major 4 US dollar pair. Let us now proceed with the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 continues to trade sideways, holding above the 20-day moving average, which is our first intermediate support zone to watch out for, 27,175, 26,990. And given that it hasn't broken above the major resistance of 27,500, I do not want to tighten my pivotal support to be so tight at 26,990 just in case of any whipsaw. So pivotal support still remains the same at 26,674 over here, unless we have a breakout and an hourly close above 27,500 major resistance. Then I could tighten my pivotal support to 26,990 for it to enroll at least on the intraday basis to 28,030. All right, over here. And however, if price action starts to break down below 26,674, that would invalidate the bullish bias view. Pardon me, I repeat again. If price action break down below 26,674, that would invalidate the bullish bias view to see it floating downwards to retest the key minor bullish reversal low of last Friday that confluence with the 50-day moving average as well at 26,285. Right, so that's for Hong Kong 33. Up next will be the Japan 225. So the Japan 225 continues to drift upwards and now is fast approaching our first resistance level at 58,932, which we highlighted as my chart of the day. And what we could see is that the hourly RSI continues to hold a series of higher low, indicating that we are still in a bullish momentum dynamic, at least from a short-term perspective. So with that, I would tighten my pivotal support level towards 56,990 over here. Okay, let me put it in writing, 56,990. Okay. $56,990. Okay, so this will be the Japan 225, which represents the Nikkei 225. Okay, so this will be a normal support level to watch. Oops. Okay, tighten short-term pivotal support level for today to 56,990, maintain that bullish bias at equals to enroll very closely to our first resistance level, 58,932. Above it, potentially seek out 59,884, which is the next FIBO extension cluster level. However, a bearish breakdown below 56,990 that will invalidate the direct push-up scenario and see a minor corrective decline to retest last Monday minor swing low at 56,096. Breaking down below 56,096 will see a deeper minor corrective decline, but still within its medium-term uptrend phase to retest the all-important minor range resistance that was previously in place since 3rd of February and 4th of February, broken up, now turns into a critical pullback support level at 55,111, 54,790, which also correspond previously with the former all-time swing high area previously on 14th of January and 15th of January. All right, so that's for the Japan 225, still maintaining a bullish bias for now. Tighten the short-term pivotal support up towards 56,990. All right. Onward next will be the Germany 30 that is representing the German DAX. So Germany 30 now seems to be evolving in a minor ascending channel drawn from the low of 6th of February, which is last Friday bullish reversal low. So with that, given the fact that now it's trading back above the 20-day moving average yesterday during the US session, then I'd have more confidence now to tighten the pivotal support level upwards towards 24,610, which confluence with the rising 50-day moving average over here. So unless we have a very clear bullish breakout above 25,100, which is the stubborn resistance that was formed during the gap down of 19th of January, got rejected on 3rd of February, which is potentially a clear near-term psychological barrier for the bulls. So if we have a bullish breakout and the hourly close above 25,100, then potentially we will see a double bottom bullish exit. So this will be the first bottom that is formed on 30th of January, second bottom formed on the key reversal low of 6th of February last Friday. Then I will tighten my pivotal support level up to 24,880. So next two resistance level to watch after 25,100 will be 25,260, followed by the current all-time high area of 13th of January, 25,505. Bearish breakdown and the hourly close below 24,610 for sure will invalidate the bullish buyer's view to see it drifting downwards to retest the double bottom minus swing low area again at 24,250. All right, so that's for the Germany 30. Next will be the major US stock indices, starting with the Dow Jones Industrial Average, which is the US Wall Street 30. So US Wall Street 30 did a spike up as expected and hit our resistance level, which mentioned on Monday, 50,532 exactly before staging that pullback. So with that, the RSI continues to be held above a series of higher low over here, indicating that momentum remains intact on the shorter term. So I will tighten my pivotal support level for today to Monday's minor swing low area at 49,880. All right, with the first support level to watch at 50,186 that managed to stage a minor bounce during today's Asia session. So as long as 49,880 tighten / adjusted short-term pivotal support holds on the US Wall Street 30, representing the Dow Jones Industrial Average, maintain that bullish bias above 50,532, potentially seek out 50,695, followed by 51,033, 51,182. Over here, which is a bunch of Fibo extension cluster level. And if we do the steeper ascending channel that is taking shape right now from last Friday minor swing low or bullish reversal low, that also potentially come close to the upper limit of the minor ascending channel for the 51,182. However, a bearish breakdown below 49,880 will negate this bullish bias to see a retest at this important range resistance that was the former all-time high previously of 7th of Jan, come break out almost a month before the bullish breakout on last Friday. So this will be an all-important pullback zone for the bulls to watch out for at 49,606 over here. All right, so that's for the US Wall Street 30. Next will be the S&P 500. So S&P 500 continues to struggle below the all-time high area at 7,005. 7,014, but one thing positive that it managed to stage a bounce right exactly at our first intermediate support zone that we highlighted on Monday, 6,916, 6,932, which confluence with the 20-day moving average and come close to the 50-day moving average as well. So given that it still couldn't break out above the current all-time high area, which is 7,005, 7,014, I do not want to tighten my pivotal support level up to 6,916, 6,932. So I will still maintain the same one at 6,887, 6,860 for now, unless we have a bullish breakout above 7,014 today, that I will tighten it up to 6,932, 6,916. Above 7,114, potentially seek out 7,038, 7,045, followed by 7,074, which is a bunch of Fibo extension cluster level. Breaking down below 6,860 will renew another round of choppy corrective downward drift to retest 6,797, 6,769. So that's for the S&P 500. Lastly will be the Nasdaq 100. So Nasdaq 100 also continues to trade, but it's below the resistance level at 25,430, 25,580. But managed to help exactly at our first intermediate support zone that we highlighted on Monday, 25,084, 24,980. So given that it can't clear above 25,580, I do not want to tighten the pivotal support to be so tight for today at 25,0840, 24,980. So I'll be on the lookout. if we able to clear above 25,580, we also clearing above the 50-day moving average and the 20-day moving average for sure as well, then a stronger bullish momentum on the intraday basis might have returned on the Nasdaq 100. So this will give me much more confidence to tighten the pivotal support level up to 25,084, 24,980. So for now, pivotal support remains the same at 24,700, 24,580 to maintain this ongoing mild bullish biasness on the Nasdaq 100. Above 25,580 in first step potentially take us up to the important minor swing high area of 30th of January and 3rd of February that kickstarted that swift decline previously to hit the key reversal low on last Friday, 6th of February, which is at 25,940. However, a bearish breakdown below 24,580 will see a choppy downward drift to retest 24,333, 24,142. All right, so that sum up all the intraday technical outlook on the major stock indices. Let us now move on to the commodity asset classes, starting with Gold XAU/USD. So Gold XAU/USD continues to drift sideways over here, can't make any headway above our pivotal resistance level at 5,169. So given that it's still drifting sideways, so potentially it may do a downward drift again. So with that, I'll still maintain a bearish bias, a mild bearish bias for now at 5,169. So the bearish bias will increase for it to retest the low of 4,795. 4,703 is the bearish breakdown of 4,940 over here. All right, so 4,940 will be something like a downside trigger level, which is also confluence with the 20-day moving average as well. Okay, let me put it in green. All right, so this will be the downside trigger level, 4,940. However, if price action instead of drifting downwards and it starts to see a hourly close and the bullish breakout above 5,169, then the bearish bias view towards the swing low area of 6th of February will be invalidated to see a squeeze up towards 5,448 and even retesting the current all-time high at 5,602, which was printed on 29th of January. Okay, lastly will be the West Texas crude oil over here. So the West Texas crude oil on the daily chart, what you could see is going to hold firmly above the 20-day and the 50-day moving average at this 62.46 level. All right, so if you look at the hourly time frame chart over here, now is testing this very important resistance level at 64.69. So we will continue to maintain a bullish bias for sure for now at 64 at using 62.38 over here, which is very close to the area between the 200-day and the 20-day moving average. So upside trigger level will be 64.69, given that it has tested since last Thursday come break. But what's important over here is that the hourly RSI starts to shape a series of higher low over here. And very importantly, we could see, seems to me that there is actually a bullish breakout that has taken shape in today's Asia session, right? Indicating increased odds that 64.69 may be taken up to the upside. So unless we have an hourly close and a bullish breakout above 64.69, then I could tighten my pivotal support previously at 62.38 to this level here at 63.34. All right, so for now, maintaining at 62.38, short-term pivotal support, maintain a bullish bias above 64.69 upside trigger level, potentially take us up to retest the 29th of January minor swing high area at 66.50/66.85 in first step. Above it, seek out 67.80 potentially, which is the ongoing medium-term ascending channel that's close to a month already since 7th of January low this year. However, if price action immediately drift downwards and broke down below 62.38, that for sure will invalidate the bullish bias to see another round of choppy corrective decline movement to retest 61.12, 60.64, maximum 59 figure level, which is our medium-term pivotal support level as well on West Texas oil. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for? So for sure, today key data will be centering around on the delayed release of the non-farm payroll data that was previously supposed to release on last Friday because of the partial US government shutdown. So it will be due today, at 9:30 p.m. Singapore time, and followed by the unemployment rate as well, same time at 9:30 p.m. Singapore time. So what market participant is still expecting a lackluster number. So only 70K jobs added. So that's around 20K additional jobs added for the previous month of 50K. Unemployment rate is expected to hover at a high level of 4.4% over here. So that has really come in. Market is expecting kind of a lackluster number. So unless we could see a very surprise strong reading on the non-farm payroll, let's say going at 100K jobs added, and with the unemployment rate dipping down to 4.3% slash 4.2%, then that could potentially see the dollar bounce in today's session over here, unless that doesn't happen. If that doesn't happen, potentially the dollar weakness scenario could potentially continue. All right. Then thereafter, you have one Federal Reserve official speaking at 11:15 p.m. Singapore time. And for those who have interest in the West Texas crude oil, so West Texas crude oil will potentially see some kind of intraday volatile movement upon the release at 11:30 p.m. Singapore time, the US EIA weekly crude oil stockpile change. So that could potentially influence the intraday movement on the West Texas crude oil at 11:30 p.m. Singapore time over here. So that pretty much sum up today's Daily Dose of Market Insights. Kelvin here, wishing you guys a great day ahead, and we shall speak again tomorrow. Thank you.